Hi guys, today I want to talk about volume, which is one of the most important indicators you have to check before going into any type of trade. So before I jump into it, let me show you my tweet on April 25th at noon when I said GNPX on the verge of breaking out on huge volume here at 582. It's a recent IPO, and basically, I don't know what's this company's product is, and I have no idea what they are doing. What I know was it broke above this key level on a huge volume, and I just traded this based on this. And as you can see, this is the chart of GNPX. When I tweeted that 582 would be a good entry price, you can see the day after that on a huge volume, it went all the way from 582 to $18. And on a daily chart, you can see from 582 to $18. And even if you miss this tweet or this trade, you could get into this stock when I tweeted GNPX can start bouncing here from $11, and you can go and check my tweets. So it bounced from basically 10.50 to 18 again the next day. So you had two opportunities. The first opportunity, you could make 200% on your money. Doesn't matter how much you wanted to invest. It was a 200% opportunity. The next one was around 50% bounce. You could make 50% of your money. All this happened in 1 to 3 days. So then people started asking me about other stocks. Somebody asked me about MBOT. I said the chart is nice, but the problem with this stock is the volume for breakout is not huge. I prefer to sit back and see if it goes to break 92 cents till 11. My guess is it cannot. So MBOT was the stock that basically broke above its recent base, and it went all the way to 88. And when the market opened, it went all the way to 92 cents. But as I said, I prefer to sit back and watch the stock if it can break 92. But my guess was it cannot. And as you can see, at 11, exactly the time I said, the stock started to breaking down and went all the way back to 84. So you can see the volume was not following up the previous day, and people started to sell their position and take profit. Another example of this situation was when I tweeted about HMNY. I said after morning panic to 315-ish, you have to dip buy it. It was on April 16th, pre-market. And guess what? When the market opened, the stock came all the way back to 320 and rallied to 350. And the next day, basically, on that day, on the middle of the day, I said there are some serious buyers. Maybe they can push the price up. It went again up to 350-ish. End of the day, it was around 380, or finally at that day, it closed. Yeah, it was around 4 p.m. It closed at 421. But let me show you the HMNY. So this is the day I tweeted that. Oh no, sorry, it was the day April 16th. I tweeted that it went all the way to 420. The day after that, it touched 480, but uh, they announced their basically they filed Form 10K. If you want, you can go and read the SEC filing. I said, okay, based on this form, don't consider HMNY as a low float stock. So low float stock are the stocks with 10 million shares tradable in a stock market. But I said HMNY is not low float anymore. So as you can see, this huge red candle shows how people started to sell their position. The next day you had another chance when you saw this volume to get out, and if you miss this one, guess what? The next day it crashed from $4 to $2.40 on a huge volume. So based on all of this, I think it's better for you to pay attention to volume because it's a very important indicator. Uh, Let me tell you some information about this indicator. Basically, what is volume? It's all the shares traded during any given period of time. Uh, 1 to 60 minutes, daily, weekly, or monthly. And these are, for example, the charts of Amazon. It's a 1 minute chart. You see huge volume when they announce their earnings. Their stock gapped up. This is their daily chart. You see the volume of the daily chart here for 200 days. This is the weekly chart for last 5 years for Amazon. And now we are talking about why should you pay attention to volume. First of all, volume tells you which direction the money is flowing. If it's a huge green candle in any time period, you can understand, okay, there are huge buyers, there are a big chunk of money coming to a stock. Or if it's a red candle, you understand, okay, the money is going out of this stock. So huge volume makes it easier to enter and exit. This is one of the most important aspects of volume. If the stock is trading, imagine the volume for each day is around 50,000 shares. So even if you buy 6,000 shares, you might have a problem to get out of the stock on a reasonable price. If the stock doesn't work and doesn't react the way you like, getting out of the stock is a very, very critical situation if the volume is low. So usually low volume stocks basically force you to become a bag holder. So I personally prefer to trade stocks with high volume because I want to have the opportunity, if the trade didn't work, I want to have the opportunity to get out very easy on minimum loss. So huge volume, trading with huge volume helps you to deal with this situation. In addition to that, with huge volume, you can take big positions. Imagine the stock is trading 5 million shares each day, so you can easily take 50,000, 100,000 position in that stock, and if it didn't work, you can easily get out. So that's another important thing. So high dollar volume means if the stock is trading, imagine 1 million shares each day. If it's a penny stock and the stock price is 1 cent or even 10 cents, it's not huge dollar uh, basically volume. But if the stock is around, for example, $5 and it's trading 10 million shares or 1 million shares, it's a huge amount of money changing hands in that stock. So eventually it creates a big uh, opportunity to take some chunks of that money. So some tips I have, basically these are the things I personally follow. I always check the float. Float are basically the amount of tradable shares in the stock. So then pay attention to the dollar volume, because dollar volume creates that opportunity for you to take some chunk of that money. Then always I check the history of the volume. I look at the daily, weekly, or monthly volume in past even few years for each stock I want to trade. Um, Remember, don't fall in the trap of breaking out a stock with low or even declining volume. Sometimes people ask me, okay, do should we buy this, or what do you think of that stock? And I take a look and just see the stock is breaking out. Yes, that's a breakout play, but the volume is very low, and also sometimes the volume is declining. So it's not a good opportunity. I'll give you some example of this later. So another thing is always look at for at least 500,000 or 1 million shares trading. This is a rule of thumb. Whatever you want to trade, at least look at these two numbers. If it's something between these two numbers, it's good. Or even more than this, it's even better. So here, I just want to explain the relation between risk reward and volume. So AMMJ was a wheat stock, and it was breaking above 30 cents. 30 cents, and as you can see, the increasing volume was very obvious. It went all the way to $2. So by looking at this increasing volume, you could just sit tight and enjoy the ride. But at the same time, another wheat stock in the same sector, CBDS, it started to break above, I would say 50 cents, 40 cents on a huge volume. But the next day, basically, sorry, the next week, this is a weekly chart. The next week, the volume actually exhausted itself. And the third day, the volume even turned to be red. People started to selling their shares. And it went sideways for a long time. And you can see there was a very, very high chance for this stock to break this level and goes back all the way to the place it started. So, yeah, some people made this 1500% when they bought from here to here. But the problem was it's very, very risky stock because the volume was not showing a great pattern. Another example was Cara, CARA, and AST. These two companies were biotech companies, and as you can see, Cara uh, basically broke this base, and it started to go up, and the weekly volume started to make this pattern as the price was going up, the volume was increasing. And one day people started to sell their position and take profit, and you see this huge red candle. So that was the sign for you to sell whatever you have in this stock and sit back to see the reaction. On the other side, AST, it started to break up. The first time the volume was good, but after that, this volume exhausted itself and the stock price came back all the way to very close level to the starting point. So there is a high chance for this stock to break any time in this time period. This stock could break down and comes back to this number and goes even down, further down. So as you can see, the volume doesn't look nice, doesn't give you any information. It went all the way up and then nobody wanted to buy the stock, so the price came all the way back down. But this increase in the volume gives you basically a reason to stay in the stock and enjoy the ride. So this couple of examples basically shows this increase in volume in weekly chart, but this can happen in any time frame. If you are trading, basically you are a day trader, or you want to get in and out of a stock in a day, you can basically use the similar logic and bring your risk reward to the level that mathematically makes sense. So I tried to make this video very short because somebody in Twitter asked me how can I interpret the volume. I don't know what's the volume candles mean for trading, so I decided to make this short video. So if you like this video, just subscribe to my channel and like and share this video. In this case, I understand, okay, you appreciated my time. And if you have any other questions or you want me to make other videos, just let me know in the comments section below. And that's it. I hope everybody enjoys this stock market opportunity and makes a lot of money. Thank you so much. Have a great day. Bye.